Hey everybody, it's Joe here. I want to give you a quick update on Bitcoin versus the US dollar. And what we're looking at right now is the chart of the Fibonacci retracement from the December 17th high of 19,891.99 cents down to the February 6th low of 58.73. What we've noticed over the past few weeks of trading is that Bitcoin attempted to actually breach this 20 period moving average, or this 20-day moving average. You can see this orange line here, it's sloping down. It acted as resistance for quite some time. The key thing about the 20-day moving average is that once you get above it and you hold it, that effectively means you are done going down. This is obviously a guarantee, but 9 times out of 10 that tends to be the case, and we can see that here as Bitcoin actually squeezed a bunch of shorts back on April 12th on pretty significant volume. We had a move from the 6,800 level all the way up to roughly the 8,000 or 7,900 level. We traded sideways a bit for a few days there, which was fine. After a big move like that, you can expect that. But you can see also over the past, over the few trading days going forward, you can see that 20-day starting to tick up. Again, this is the point where we say we've stopped going down. It doesn't necessarily mean we're going up. It just means we've stopped going down. We see this sloping line on the 20-day moving average moving up. The next level of resistance was the 50-day, this yellow moving line here. The 50-day moving average was actually also pierced on pretty significant volume and a heavy move, roughly up to about the 9,000, 9,050 level over the next few days here. We attempted to get above 9,030, 9,015 and kept failing. But you'll notice that the volume started to drop off here, particularly on the red day. You can see this volume is actually really low. This is signs of a dull market is what I call it. You have kind of this sideways action. People don't really know where the direction of the market's actually headed for Bitcoin. And moreover, you can see that starting back here, we've got this line of resistance. This resistance line here. Again, this was where the 20-day moving average was actually resisting Bitcoin moving higher. And so shorts were probably locked up here. Well, yesterday they got squeezed, or actually I should say it's today since it's still April 24th. They got squeezed pretty heavily, and we actually pierced through the 23.6% Fibonacci retracement level. This is all a positive sign. I think what we're going to see going forward here is this key crossover point between the 20-day and the 50-day. If we can have Bitcoin hold above that 9,050 level, you'll start to see this 50-day moving average actually start to tick up. When the 50-day starts to tick up, then we are actually officially moving up. Just like with the 20-day, when you get above it and hold, you're done going down. When you get above the 50-day, you're typically going up. The next line of resistance is right here around this 200-day moving average, which is, roughly call it 9,900. Let's just say 10,000, because 10,000 will be a key psychological level. I suspect a lot of shorts will be set up around the 10,000 level. We get through that on volume and hold above that 200-day moving average. The next logical stop is 11,228.